Welcome to the Nifty Noon Podcast. This is your deep dive where we take a stack of your sources and really pull out the most important nuggets of knowledge for you. Today we're plunging into the very dynamic world of crypto and digital assets. We're drawing on a series of our recent market briefings and daily updates from just this past week. Our mission for you today, it's really to unpack this whirlwind of developments that have genuinely pushed crypto further into the mainstream. We're talking new regulations, some surprising institutional plays, and a massive resurgence in the NFT market. Okay, let's unpack this.
Indeed. And it's been quite a week. If we look at the reports from, say, July 21st through July 25th, what's really fascinating is just the rapid succession of key events.
Right, not just random noise.
Exactly. These aren't isolated incidents. They signal a maturing ecosystem. And, as one of our Nifty Noon briefings from the 25th put it, a potential new wave of capital and users to enter the crypto ecosystem.
A new wave.
Yeah. So we're going to break these developments down for you chronologically just to show how they all kind of connect together.
Okay, sounds good. So we're starting our deep dive on July 21st. That was a really monumental day, especially for regulatory clarity, wasn't it?
That's absolutely right. July 21st. This is the day President Trump signed the Genius Act into law.
The Genius Act, right. Guiding and establishing national innovation for U.S. stablecoins.
Exactly. And this is incredibly significant because it establishes the first clear regulatory framework for stablecoins in the United States.
Wow. Okay.
What it mandates, essentially, is full backing with highly liquid assets and, importantly, regular, transparent disclosures.
So what does this new framework mean? For stablecoins themselves, obviously, but maybe, more broadly for DeFi, the decentralized finance market.
Yeah, good question. So for stablecoins, the expectation is this act will encourage major traditional financial players to launch their own stablecoins.
Competition rising.
Definitely. Directly challenging current leaders like Circle's USDC and Tether's USDT. In fact, we already heard from Tether's CEO, Paolo Ardoino, who announced plans to comply and actually move operations to the U.S.
Interesting move.
And Circle's CEO, Jeremy Allaire, also stated they're aligned with the new rules. Now, what's particularly interesting, especially if you're looking for yield, is the expectation that by banning yield on stablecoins themselves, the Genius Act could actually funnel a wave of institutional and retail capital into DeFi protocol.
Ah, okay. So the money has to find yield somewhere else.
Precisely. DeFi, for those maybe less familiar, that's decentralized finance, lending, borrowing, stuff like that, directly on the blockchain. This could potentially spark what many are now calling a DeFi summer.
A DeFi summer.
Right.
As users hunt for that passive income.
Exactly.
That's a huge shift. So this new clarity, it seems like it had this fascinating ripple effect, almost like it signaled a broader maturation and ignited a spark elsewhere, especially in the NFT space, right?
Yeah, precisely. It felt like the market kind of collectively breathed a sigh of relief. And yes, simultaneously, on that same day, July 21st, we saw the beginnings of a massive surge in sales in the NFT market.
Wrong.
Which understandably led many to speculate that the long NFT winter might finally be thawing.
Finally.
Our newsletter from July 22nd really highlighted this. It noted a generational sweep, 76 CryptoPunks acquired for roughly $13.5 million.
$13.5 million on one day.
On one day. For those punks, a truly eye-opening transaction.
And we also saw some other notable movements that day, didn't we? Things that signaled broader institutional interest.
Yeah, definitely. Like Charles Schwab's CEO anticipating spot BTC and ETH trading sometime soon, and Bitmine Immersion announcing a massive $2.5 billion raise specifically to buy more ETH.
$2.5 billion. That felt like a really decisive moment for the market overall.
It really did. Then, moving to July 22nd, the whole NFT summer speculation really started to gather steam. That's what our Nifty Noon newsletter focused on.
Right. It ramped up fast.
Yeah, absolutely. The overall NFT market cap jumped, to get this, over 20% in just 24 hours.
20%.
To more than $6.3 billion by July 22nd. And this rally was truly led by the blue chip collections.
Okay, it's the big names.
The big names. CryptoPunks, for example, saw its floor price climb over 15% with more than 80 sales in a single day.
80 sales.
Pudgy Penguins, they saw a 15% surge. Bored Ape Yacht Club BAYC posted impressive gains of 20%, and Chromie Squiggles surged 34%.
Wow. That really signals a strong return of interest in those foundational digital assets.
It does.
This sudden burst of activity, though, it marks such a dramatic shift from how stagnant the market felt for a while. The renewed excitement is, it's palpable.
Yeah.
But the big question on everyone's mind has to be, can this momentum actually be sustained?
That's the crucial question, isn't it? And it was definitely one we asked in our newsletter that day. This surge, which was largely concentrated in Ethereum-based collections, it also coincided with ETH's price pushing up towards that $4,000 mark.
Okay, so ETH momentum helped.
It seems likely. We also learned that day that Strategy, formerly MicroStrategy, acquired another 6,220 BTC for around $740 million.
Still buying.
Still buying. And Trump Media now holds approximately $2 billion in Bitcoin and Bitcoin-related securities.
$2 billion?
Which clearly demonstrates this growing corporate belief in Bitcoin as, a robust treasury asset.
Okay, so the next day, July 23rd, that brought us another landmark announcement, one that really solidified this mainstream integration narrative. It was detailed in our nifty noon update, TradFi levels up.
Yeah, this was a big one, the PNC Bank and Coinbase partnership.
Right, PNC, a major U.S. bank.
It's a major U.S. bank partnering with Coinbase to offer crypto services to its massive client base.
And that includes
retail customers, corporations, even government agencies, allowing them to buy, hold, and sell digital assets directly from their PNC accounts.
Wow.
And it's framed as a two-way street because PNC is also providing banking services to Coinbase.
Interesting.
This partnership really starts to blur the lines between traditional finance, or TradFi as we call it, and this new digital economy.
So what does this all mean for you, the everyday person wanting to access these assets? It sounds like more and more people will be able to engage through institutions they already know and trust.
Exactly. And it's not just PNC. This follows similar announcements from JP Chase. They're planning to offer loans secured by BTC and ETH.
Right.
And Bank of America has made moves too. So it indicates a clear trend of these traditional financial institutions deepening their ties with crypto.
It's not just a one-off.
Not at all.
Yeah.
And beyond just the bank partnerships, the regulatory environment kept evolving that day too. The SEC approved the conversion of the Bitwise 10 crypto index fund into an ETF holding various cryptocurrencies.
Okay, another ETF product.
Yep. And we saw new ETF filings like Amplify ETFs filing for a Solana monthly option income ETF and 21 Shares for an Ondo ETF. Meanwhile, the iShares Ethereum ETF was already leading in inflows, pulling in $8.5 billion by this point.
$8.5 billion. Huge demand.
Huge. And even Goldman Sachs and BNY Mellon partnered up to launch tokenized money market funds.
Tokenized money markets. So yeah, further blending TradFi and crypto, it really feels like the gates are opening wider.
They certainly are.
Okay, so July 24th. This delivered another massive indicator of mainstream acceptance, which we covered in our nifty noon newsletter. Jack Dorsey's block, ticker SQ, joining the S&P 500 index.
Yeah, this is a really significant step in mainstream finance embracing crypto-aligned companies and blockchain infrastructure.
Definitely feels symbolic.
Very symbolic. Block became the third public company with significant Bitcoin holdings to be included in the benchmark, following Coinbase.
And how much Bitcoin does Block hold?
They hold 8,584 Bitcoin, which is valued at approximately $1 billion right now.
$1 billion worth. Now, this next piece really underscores the shift we're seeing, I think. It's not just about a company holding Bitcoin, right? It's about the broader fintech ecosystem that Block represents. Integrating Bitcoin, making it more accessible, more recognized for maybe everyday transactions down the line.
That's a great point. It's about the infrastructure as much as the asset.
So what kind of financial impact is this S&P 500 inclusion expected to have?
Well, the immediate impact is increased visibility and exposure to institutional investors. Index funds are expected to buy around $11 billion worth of Block shares.
$11 billion.
Yeah, representing over 23% of its market cap. So, as our newsletter noted, it truly signals a wholesale change, where these crypto-native or crypto-aligned firms are gaining acceptance in traditional finance. They're moving beyond just being a niche play.
Right, into the core of investment portfolios.
Exactly.
Okay, so finally we arrive at July 25th. This brought an intriguing new corporate strategy and a look at the overall market. Highlighted in the nifty new newsletter, the corporations want your JPEGs.
Yes, this was a fun one. Ethereum holding company GameSquare made headlines. They acquired the iconic CryptoPunk #5577.
Which one was that?
That's the cowboy ape one.
Ah, the cowboy ape.
Okay, they acquired it for $5.15 million in preferred shares from DeFi veteran Robert Leshner.
$5 million in shares for a JPEG. I mean, a historically significant JPEG, but still.
Who would have thought, right? A digital cowboy ape becoming a corporate treasury asset. It truly highlights how our traditional definitions of value are evolving, doesn't it?
It really does. That's a fascinating development. It's not just holding Bitcoin. It's actively using NFTs in a corporate strategy. What exactly does this novel move, as the newsletter called it, actually entail?
Yeah, it's described as a novel move for this corporate crypto treasury meta. It signals a really aggressive strategy to maximize returns.
Okay, so how?
GameSquare plans to deploy capital into DeFi, and they've specifically allocated $10 million to an NFT yield strategy.
$10 million for NFT yield.
And as part of the deal, Leshner, the seller, will also become the face of GameSquare and help them tokenize their own shares.
Wow, okay. So integrating him too.
Right. This whole thing could set a new precedent for how companies integrate digital assets and culture into their core strategies. It's moving beyond just simple asset holding to active management and, well, leveraging these digital assets.
That's really something to watch. And speaking of assets, wrapping up the red, what did our latest Nifty Noon reports show about broader market performance on the 25th?
Sure. So our Q3 2025 Outlook briefing and the daily updates showed Bitcoin trading firmly above $115,000.
115K.
Ethereum was around $3,600. But what's particularly notable here is that Ethereum just outpaced Bitcoin in spot trading volume.
Well, really?
For the first time in over a year, which might suggest some diversification of institutional interest beyond just Bitcoin.
Interesting dynamic.
Solana also held strong, around $180, and its true TPS transactions per second surpassed 1,700, shows the network's performing robustly under load.
Good numbers for Solana.
Definitely. We also saw Google searches for altcoins hit a 4-year high.
Altcoins. Okay, so retail interest is maybe broadening out again.
Seems like it, hinting at a broader, re-energized retail appetite. Additionally, Stablecoins Inc. announced a pretty significant $360 million capital raise to purchase ENA, and they plan to list shares on NASDAQ.
Okay.
Coinbase Perpetual Futures launched in the U.S., offering more sophisticated trading tools for advanced investors.
More tools, more access.
Right. And in the meme coin or community coin space, BONK Fund flipped Pump.Fun in 24-hour active wallets and announced 1% of its revenue for buybacks. Meanwhile, the PUMP token fell below a $1 billion market cap.
The usual churn there. And regulatory.
Still active. Beyond the Genius Act, the President's Working Group on Digital Assets is expected to release its 180-day report very soon, July 30th. And the Senate Ag Committee plans to release its discussion draft on market structure in early September.
Okay, so more to watch there.
And one more piece. CoinShares Asset Management became the first firm in continental Europe to receive MiCA authorization.
MiCA, right, the EU framework.
Exactly, allowing them full EU-wide crypto portfolio management. Big step for them.
So, quite a week. Let's try to tie this all together. What does this all mean for you, the learner, trying to navigate this incredibly fast-paced space?
Yeah, if we connect this to the bigger picture, what you're seeing is this convergence. Regulatory clarity starting to form, increasing institutional on-ramps like banks getting involved, and this revitalized NFT market. It all points to a potentially robust period ahead for the crypto ecosystem. It really suggests a long-term maturation, crypto moving from the fringes, towards deeper integration with traditional finance.
Yeah.
These aren't just one-off events. They feel like parts of a larger narrative where digital assets are becoming a fundamental component of the global financial landscape.
It truly feels like these past few days, July 21st to 25th, have been a microcosm of these major shifts happening in digital assets. You've now got the key insights from this deep dive, hopefully giving you a powerful shortcut to being well-informed.
And perhaps this raises an important question for you to consider as you watch this space evolve. As digital assets become increasingly integrated into corporate strategies, into traditional financial systems, how might this impact the very nature of what we consider value in the coming years?
A fascinating question to ponder. And that's our deep dive for today. Thank you so much for joining us on the Nifty Noon podcast. For more daily insights and in-depth analysis, please be sure to subscribe to the Nifty Noon X profile and, of course, our Substack newsletter. We'll catch you on the next deep dive.